right. Good morning, everyone. Thank you for joining us today. This is Brian Morris, and I'm here with my colleague Neil McDonald. We're from Binary Stream, and we're presenting the session, Managing Subscriptions Effortlessly with Microsoft Dynamics ERP. So just before we get started, I wanted to give a big shout out to the folks at DynamicsCon for helping us or inviting us to their inaugural conference. We're really excited about presenting what we have for you today. So here's today's agenda. I just wanted to walk through what it is that we'll be covering. I wanted to start with a quick overview of what our subscription billing suite is and what the components are. This is an integrated solution with finance and operations, so you'll see exactly what it entails. After we go through that, we wanted to do a little bit of a role play where instead of talking about abstract concepts, we'll really get into some specific scenarios that we hear every day from real customers like yourselves. So we'll go through that. Neil and I will take turns asking and answering some questions about the basic functionality, and then we'll get into the demo itself, which is going to form the bulk of our time today. At the end, we will have some time for questions and answers, but of course, you can always log them via chat or contact us afterwards. All right, so let's get started then. I'm never a big fan of the About Binary Stream company slide decks. They feel a bit braggy to me, so I've omitted the whole reel of company logos of customers that we work with. Suffice it to say that if you're not familiar with Binary Stream, we have been developers of Microsoft solutions for over 20 years now. And while we did start out originally, like a lot of people, with the Great Plains product set, we've since diversified and modernized our solutions. So we, of course, work with both Business Central as well as finance and operations. One thing I wanted to point out is that we have achieved both the Gold Certified ISV status as well as the Microsoft Preferred Solution designation. And those were obtained by not only customer satisfaction, but also the fact that we've committed to within 60 days of a new version of the underlying ERP being released, our IP will also be out. So you never have to worry about being unsupported on the modern versions of the software as they come out. All right, so let's talk a little bit about the subscription billing solution and more of the state of the market. So the reason why we entitled our session Mastering the Subscription Economy, there are several reasons behind it. As you know, we're in the midst of a massive pivot towards subscription-based revenues. You see it every day from big tech companies that are charging for music streaming, Netflix, that sort of thing, up to old school retailers. Like, you know, if you want to buy a razor now or other personal care products, a lot of times that's done as a subscription model. So it's a big change. The benefits for the customers are pretty obvious because it helps preserve cash flow, decreases risk, and also lets you shift from CapEx to an OpEx type thing for large type purchases, all of which are beneficial for the customer. But for the vendor, it's a trickier proposition. The revenue streams are generally smaller up front, but the revenue is steadier and more predictable. So how can you best utilize that going forward? If you find that any of this is relevant to your business, go ahead and ask yourself if your current infrastructure is ready to handle an influx of new subscription-based revenue. This might sound like an odd problem to have, too many new customers, but it can be an issue, as we'll see in our example. When you consider some of the manual processes and bottlenecks in the whole quote to cash cycle, that's where Binary Stream comes in. Let's take a look at some of the elements of our solution. So we've broken them out here on this screen in three logical categories. So let's start off with the advanced revenue and expense deferrals component. We do like our four-letter acronym, so we'll call that one ARED. What that does is it allows you to manage the revenue recognition not only on the revenue side for sales that you made for an annual contract, but also on the expense side. So we can handle that certainly at a line item level. You can have a mixture of one-time products, monthly products, annual products, and they all have their own individual recognition schedule. We can also handle reports that are very auditor friendly, as you'll see. The next component, and in my opinion, the major component of what we'll be focusing on today, is the advanced recurring contract billing, or ARCB product. That's basically the brains of the operation. Within ARCB, that's where you can specify exactly what's going to happen at the contract level. You can say that 10 items might be on the contract, maybe 2 of them are one and done, the other ones are annual and recurring. All of them can be set up with their own individual escalation clauses. So if you know in advance that you're going to be increasing, say, by 5% per year, you can specify that in the contract. Conversely, if you want to have someone escalate according to an external schedule like CPI or inflation, that can also be handled. Of course, we have a monthly recurring revenue report as well. We'll be showing that later. The third and final component is MIRA, the multi-element revenue allocation. And in some senses, that's the most important or timely component of the suite. What that refers to is the ASC 606 compliance. There are numerous regulations that you need to take into account if you're going to be selling items on a subscription basis in terms of smoothing out the revenue across the different items. If you offer a discount, that might need to be factored in as well. So it doesn't apply to everyone, but if you are subject to the ASC 606 regulations, MIRA is going to be a lifesaver for you. Now that we've talked about some of the abstract concepts of our solution, let's take that into the real world. Well, fictitious world, because this is a made-up customer, but you get the point. Let's talk about Hooli Computing from Silicon Valley. They're a fast-growing video processing company, and they offer several different subscription packages to their customers. Currently, they use finance and operations, and they love the program, but there's a few areas where it doesn't quite meet their requirements. In order to flesh out their needs, Neil and I are going to do a really quick role play scenario to show you exactly what happens. So in this case, Neil is going to be the questioner. He'll be playing me, and I'll be the customer. So Neil, you can ask away.
Okay, great, Brian. So Brian, I know you contacted Binary Stream because you've got some subscription issues. Tell me what some of those issues are with respect to billing and deferrals.
Certainly. Well, Neil, is it? Yes. We have a few different lines of business. And while some of our simple contracts are easy enough to work, where we just charge the same flat amount every month, we have some complex contracts that are requiring a ton of manual work.
Okay. So tell me more about some of the complex. The simple ones are easy, right? Tell me about the complex issues.
Okay. Well, here's the big one that really occupies the bulk of our time. We have this one image processing software, right? And it's sold as an annual subscription. Okay. Where it gets complex is that in addition to the $12,000 annual licensing fee, we also monetize based on the volume of data processed. So how we've decided makes sense for our company is we include 50 gigabytes of throughput for each month as reported by the data uploaded to our processing server. Anything beyond that, we charge an extra $2 per gig.
Okay, so the 50 gigs included in the 12,000. So
right.
how are you handling that overage in F&O today?
In a word, poorly. It's
okay.
Well, what happens is Tim, he's our internal IT guy, he runs a query from the processing system, which tells us exactly how much data was processed, so that can be taken as the truth. But there's a few key problems in that it uses a different numbering scheme. So Acme Inc. might be AC001 in one company, but Acme in the other system. So it's a problem. We're always having to match it up, and there's companies with similar names, as you can imagine.
Probably like
want to charge systems. Yeah, we don't want to charge Acme Systems what Acme Inc. should be getting. So what happens then is Angela, our billing coordinator, she needs to look at this report, match the correct customer, key in that consumption amount for each of our 400 customers, which is growing, by the way, then do some math and figure out if we need to charge an overage fee.
Sounds pretty complicated. I wouldn't want to be Angela.
No, she's pretty sharp, and she's got the process down to a fine art. But the reality is it still takes an extra 3 days each month to process these charges. So as you can imagine, our CFO is not exactly thrilled about the effect that this has had on our average days to pay and the cash flow. To take it from another angle, sometimes, even though Angela's great, she sometimes fat fingers it when she's keying it in and the incorrect amount is in there.
Common problem.
What happens then is it's one of two things. It's either going to overcharge a customer, and then there's inevitably going to be a credit note when they spot it, or if we underbill and we miss out on the revenue, good luck. I mean, I don't really relish the thought of sending a customer a bill in arrears from 4 months ago because we keyed something in wrong. So that's revenue that just goes bye-bye.
Right, and I'm sure the customers aren't telling you when you underbill them either. Okay,
Oddly enough, no, we don't hear that as often.
Yeah. Okay, so I've got a good grasp on the basic requirements for usage base for your subscriptions. I'm guessing there's some deferral requirements in there as well. What else are we looking for to address in your current system? Why are you looking at this solution today?
Well, just keep this amongst ourselves, but we're in the pre-IPO stage, and as part of the due diligence, we have the pleasure of numerous surprise visits from the auditing team. So in most cases, finance and operations is great. It gives us the ability to quickly find the source document they need and send them on their way. Right. One big exception, though, and that's around deferrals. So
Right.
because we do have a lot of these prepaid contracts, we have contracts with Microsoft for Azure and other providers that we pay for and then resell.
Mhm.
It's a problem. The other week they pointed out that my deferral balance as of March 1st for a specific account was $63,275, and they asked me to prove it. Do you have any idea how long that took us to forensically reconstruct that amount?
I'm betting you were home late for supper that night.
Yeah, I wish that was the case. It took me and 3 other members of the team until 2 in the morning to go find all the appropriate contracts in F&O, pull the source materials and the journal entries, and then key it into Excel and build it out. Luckily, the numbers did match exactly, but it was not fun proving it.
Hey, Brian, you'd be interested to know that we have many predefined out-of-the-box reports in our solution. Some in Power BI, some in the application itself. So the next time this comes up, a few clicks of a button, hand the auditor everything that they need in about 2 minutes, and that'll include the time it took you to walk back and forth to the printer. Because you're going to know they want a hard copy, right?
Man, I wish I would have known about this before March when we had our last audit. It could have saved us a whole bunch of time. That does sound amazing. I can't wait to see it. The last area that I wanted to mention to you, though, that I wanted to improve was our monthly recurring revenue report, the MRR. I'm sure you know about those. It's our ultimate KPI in that everyone's bonuses are tied to the performance and the numbers that are enumerated in that report. We have a pretty nice one that I have to say I built in Excel, but it's not in real time. And I always need to go ahead and refresh it from multiple data sources because, again, our CFO is asking for it. My employees are asking for it because they want to know how they're doing against plan. It's pretty tough. I would love it to be a bit more automated. And from what I saw earlier, it looks like you have an MRR report out of the box. Can you tell me what it looks like?
How would I do better than that, Brian? Let me actually show you what it looks like. Looking at my system, we can come right in here. There's a monthly recurring revenue report. And as you can see, I can filter this so I can compare it to year over year. I can come in and I can do some look at different schedules. I can look at different customers. I could even, and I haven't gotten to this point yet in this report, but I could add my items and do an MRR by item or by item group. So because it's Power BI, it's fully customizable by you as the customer. As you can see, we have it graphically with our year over year comparisons here at the top. And then down below, I've got my beginning MRR, my new sales, my renewals, any upgrades or downgrades. So what's changed? Have the prices changed? Has the quantity changed? I can see those numbers. My churn, I mean, that's a really important in a subscription business. Everybody wants to track their churn. And then, of course, the ending MRR. And as you can see, I can see it period over by period. Now, this is just one of many reports, Brian. If I come back in and look in here, I can see in my list of reports, we actually have a declining balance report. We have both recognized and unrecognized reports. We have a revenue waterfall. This is an interesting one. It actually shows how your dollars are moving from the balance sheet to the P&L. So you can see each period as I scroll through. For example, I can see what's unrecognized versus what I've already recognized. Again, contract by contract, you can take this down customer by customer, line by line. So this is just some of the reports, Brian. In addition to this, I'm not going to run the reports, but inside of finance and operations, you'll notice here, I've got my advanced recurring contract billing module. Notice here the inquiries and reports. There's many of these that are showing here. I come to the advanced revenue and expense deferrals. These are the 2 main modules that we were talking about. Again, notice I have some inquiries. Rather than run all these reports, let me just very quickly, Brian, show you what these reports would look like if I were to run them. Again, here's an MRR. This is the one out of the box. This is not the Power BI. So if I don't want to run Power BI, if I don't want to set that up, I just want the out of the box report. This is what it would look like. As you can see, we've got the graph, we've got the beginning, the new sales, renewals, again, the upgrade, downgrade, that all important churn, the ending MRR, and all of the month headings are hyperlinks. I can drill into those and it will split the data out into 2 different views of the data. Same data, but one is going to show me category by category what's in there. The other view will show me customer by customer, schedule by schedule, where their dollars are sitting as far as these categories are concerned. This, again, another view of a Power BI that could be built. And notice this one has the customers, it has the items, has all the details that I need to look at there. And with Power BI, the nice thing about it is if I drill in any one of these numbers, it will change the entire graph structure. So I can really drill in and see exactly what's going on. We have an upcoming contract renewal report. So I always want to know, my customers that I'm dealing with today, when are they going to renew? How many dollars is that? What did I last invoice them? What is that annualized? The total contract summary report, again, just very quickly looking at it again, I can filter and sort this by customer and so on. New contract sales, especially when it comes to making sure you're tying in your commissions. What are the new sales? The terminations, again, this is part of that whole all-important churn. You want to make sure that you keep those customers. This report can be run and you can hand this off to your sales guy and say, here's what's going to be terminating next month, next quarter. Go out and do some renewals automatically. Total contract revenue report. And notice we show in here not just the current invoice amount, but what is the current deferred versus non-deferred, the current recognized versus unrecognized. So this is taking the advanced revenue expense deferrals, the advanced recurring contract billing, and tying those together to give you one solid report that shows all of that in one spot. The deferral balance report. Brian, you mentioned about the auditor coming in and saying, hey, how many dollars did you have in your balance sheet, or show me what you had there. Here's an example. Now, this is the summary report. But notice I have multiple deferral accounts. I've got some that are debits, some that are credits, because I'm doing my prepaid expenses in here as well. But I have in total $86,065.73. I can literally run this report in about 45 seconds. If I had to go again, run to a printer to get it to the auditor, okay, maybe it's a couple minutes to go to the printer and back. But maybe the auditor says, this is nice, but I want the detail. Prove these numbers out. Show me by customer. Well, that's where the detail of this report comes in. Notice we have the schedule numbers on the side. Of course, we have our account numbers. I can show you which invoice those originally came from, when we created that invoice, who the customer is, the items and the product name of those, where are they sitting on the balance sheet. Again, the main accounts. I've also got, of course, the financial dimensions in there as well. What was the original balance? So when this invoice was created, this deferral was originally $250. When I ran this report, which is on September 30th, I had recognized $202.04, leaving me a credit of $47.96 still in there, and I'm recognizing this on a straight line basis. Notice I've got some event-based items in here as well. So this is, again, a very detailed version of that report, and again, line by line, and this takes no longer to run than the summary report. The revenue waterfall report, again, this is showing if I run my recognition on a regular basis, these dollars will move from the balance sheet to the P&L at an amount, in this case, of $388 a month, as we can see. If we watch this line, the next report shows the declining balance. What's left on the balance sheet? And we notice it's coming down by that $388 a month. So that's just some of the reports that we have in the system, Brian. But let me jump in and show you inside of finance and operations, where did all this data come from? How did it get there? And what I want to do is look at your exact scenario, the one that we outlined earlier. So I have, if I come to the advanced recurring contract billing, I do want to point out these are fully integrated finance and operations modules. So if you decide to install this product, you don't have to worry about, okay, so I've got my F&O and I've got this subscription billing, I've got this deferral product. How do I make these things talk to each other? How do I do that integration? We've done the heavy lifting. The integrations are done. Let me come into the advanced recurring contract billing. Whoops, sorry about that. And if I come up in here, the advanced recurring contract billing to all my billing schedules, I have a couple schedules I want to focus on for this particular presentation. I want to look, first of all, at number 516. So this is one I set up as that contract that we talked about. So notice I've got my header information at the top. So obviously the header is what drives everything. So I'm going to pick the customer. So in this case, I've set up Cave Wholesales as my customer. And this is an out-of-the-box finance and operations customer. There are a lot of things that Microsoft does really well in all of their ERPs. The general backbone, the general ledger, the receivables, the payables, Microsoft handles those really, really well. So rather than reinvent the wheel, what we're doing is we're piggybacking on top of that. We're taking that accounts receivable module, we're using that customer. I will point out too that any invoices that we create using this module will share the same AR subledger as invoices that you create anywhere else. So when you run an age trial balance, when you run a report for this customer, when you run a customer statement, all the invoices are included. You don't have to go somewhere else to find, well, which ones came from the advanced recurring contract billing module versus which ones were just standard invoices I created. Same subledger. If I come across, notice we have different billing frequencies. Now, again, I'm working at the header level. I've got annual, or let's start at the top. My one-time, my daily, my monthly, my quarterly, semi-annual, or annual. Now, we can take it even one step further. Suppose you have a situation where the customer asks for a huge discount. You say, no, we can give you that discount if you pay for 3 years in advance. So I'm going to bill you every 3 years. No problem. I could select annual billing interval 3. It will now bill every 3 years. What if I want to bill bi-monthly? Well, you notice I don't have a bi-monthly option, but I could choose monthly billing interval 2, and it will bill bi-monthly. Now, bear in mind, I'm doing this at the header level. What I do here will affect every line. But if you look down very quickly at the lines, you'll notice each line can have its own individual billing frequency. So unlike a standard subscription invoice or sales order inside F&O, where basically the sales order is the sales order, it just keeps repeating, I can have different frequencies, different line items, different amounts, and I can have these change on a regular basis. I'm going to put in my start date and my end date, just for a little piece of convenience. If your sales guy goes out and he's trying to co-term this contract with another one for your customer, and maybe that's 46 months out. I can count on my fingers to figure out what 46 months from today is. But wouldn't it be easier if I could just say, I'm going to do it monthly, start today, billing period's 46, and have it calculate the end date for me. Again, just a minor convenience, but something that some of our customers really liked having. We have the ability to auto renew. Again, the subscription business, one of the tenets of subscription business is that evergreen revenue. You want that customer to stay a customer forever until they tell you, stop billing me, I don't want your service anymore. You want that to auto renew. So we have the ability to do that, and we can add multiple lines per renewal. And think of where we might need that. Suppose you have a situation where you have a 36-month contract billing monthly. At the end of the 36 months, it's agreed that it will renew for 12 months. So if I'm billing monthly, I can add 12 additional lines to my schedule, and I'll show you the schedule here in just a minute, where I will bill months 1 through 36. When I finally bill month 36, if the renewal is turned on, it will look at how many more periods does it add, and it will add, in this case, because I put monthly 12, it will add month 37 through 48. So again, for my MRR report, for all of that forecasting that I want to do, for my all my deferral reports and so on, I can see into the future as long as that auto renew is turned on. There's a couple other options in here. I won't go into all the detail. Different addressing capabilities. So I've got a delivery versus a bill to address. We actually put this in for one of our customers who was actually sending invoices to their customer with multiple product lines. And their customer, and in fact, they had many customers doing this, said, well, we have different accounts receivable people that look after our hard goods versus look after our services versus look after our digital properties. So do us a favor and split those out, put them on different invoices and send them, even though you're delivering to the head office. I want these subscriptions billed to different places. So we've got the ability to do that as well. Okay, so once I've got my header set, now I'm going to start adding my line items. So let's go back to the schedule that you talked about earlier. You have that service contract, so I've got that here. If we scroll across, we can see I'm going to bill that out. I've got a price set here of $3,000, and that could be, I think the example you mentioned was $25,000. Notice I've got this set as a flat, so I can actually key in whatever price I want. I'll just leave it there for now. Going to come back in, and there's my SaaS software. So this is my monthly subscription, and in this case, I'm going to be billing this monthly. And I've also got it set to tiered pricing. I'll explain that pricing here in just a moment. And then I have my pro services, and I've got those as standard items. And the customer's going to buy maybe 20 hours of pro services that I want to recognize as they're consumed. Now, let's break down each of these items. I want to talk about the item type and the pricing method for each of these. Notice the item types here. I've got 3 of them that are listed here. I've got my standard item type. That simply means, how is that item treated out of the box? I'm going to take the item, put on a sales order, boom, done. That's what we're doing. We're just treating it as a standard item. But we also have a usage-based item where we're going to track what is the consumption that the customer is using. And it could be based on an actual meter reading where we store the meter reading from last month, compare it to the meter reading this month and calculate the difference. Or it might be an actual consumption. Think of your cell phone. My cell phone, I've got my base plan, which includes 500 free minutes. They track how many minutes did I use the phone, how many texts did I send. Then at the end of the month, they send me a bill and they start me back at 0. They may or may not store the prior amount. They're not comparing the two. They're simply billing me based on I call it zero-based billing. And then we have milestone billing. Think of a situation where, the sales guy goes out and he negotiates a contract, and the contract doesn't say, I'm going to bill you in January, February, March, April. Instead, it says, I'm going to bill you 10% when you sign. I'm going to bill you 30% when we deliver and implement. I'm going to bill you 20% when we do the training, and whatever's left, I'll bill you that when you sign off that you're satisfied. I can't put that on a calendar because I have no idea when those things are going to happen. So we use milestone billing, where we set up a schedule with no end date. As we reach the milestone, we pop the end date in and we bill it based on that milestone having been achieved. Okay, so those are our item types. This is a standard item. Let's go across, and again, notice I can change the billing frequency. So all the same frequencies are available up top. We're available on the line level as well. So I have an annual line, I have a monthly line, I have a one-time line. And I can set each of those individual parameters, and the system tracks them. Let's talk about the pricing methods. We have standard pricing. Again, simply what that's saying is, if I were to take this item and throw it on a sales order, forget subscription billing, forget the advanced recurring contract billing existed, how would finance and operations treat it? Would it go look at the base sales price? Would it look at some kind of a price list? Would it go look at a trade agreement? However it would handle it out of the box, that's what we're calling standard. Flat, which is what I've got here, allows me to change the price. I might be using some kind of a CPQ, some kind of a front-end system that's doing calculations and pricing for me, and I simply want to push the price in. I would choose flat. I don't have to have a price list inside of finance and operations for that. I simply choose flat, let it handle the system. Or think of another situation. This is very, very common in the subscription business. You may have a situation where, yes, you have a list price. And say, suppose, for example, this item, the list price might have been $4,000, but you've gone out and told the customer, or the sales guy, go out and make the best deal. Go negotiate. Do whatever you have to do. So in this case, because they bought some professional service hours, we dropped the price down to $3,000. Another sales guy might go in and say, I'm going to get $5,000 for this. And I'm going to throw in the service contract, something like that. How do you build a price list when your sales guys can go out and do whatever they want? They can charge whatever price they want. They can make the best deal. I can't build a price list that says that. But if I use flat, I can then key in or import in any amount I want, even a $0 if I wanted to do that. Notice that we have a tiered pricing. I'm going to show you this in a little more detail when we get down to that usage item. But what it's going to do is take a trade agreement and use it just a little bit differently than what you would expect, and actually do cumulative tiering. So this is our item number one, our service contract. We're billing it annually. Now, Brian, if I'm going to bill annually and you're going to pay me today, I may have cash flow, but I don't necessarily have revenue. This item would have to be deferred. I owe you the service over the 12 months. Therefore, I have to create a deferral. Notice this link right here to advanced deferrals. This is actually going back and reading the defaults from the setup of the advanced revenue expense deferrals module. I'm not going to show you all the setup screens. I can do it if you want to see it at another time. But it knows that this item is automatically deferred. It knows how to treat the revenue. It knows how to treat a discount. It knows how to treat the consumption if this was a hard good, like a piece of hardware. Notice we have both short-term and then the standard. So we're taking anything on a rolling 12 or a standard fixed 12 months, entirely up to you as the user, and we're breaking it out short-term, long-term. The accountants, we love to do that. We like to have on our balance sheets our short-term assets, our long-term assets, our short-term liabilities, our long-term liabilities. So we can break that out depending on whether, again, I'm talking my expenses or my revenues. I can have it on my asset or my liability side, but again, I can break it down short-term, long-term. Of course, it knows where the recognition is going to be. That's pulling the standard account from the item. I've got straight line in this particular case. I've got it set to equal per period. This is going to create a deferral schedule, straight line, 12 months. I'll show you that in just a moment here. Okay, let's go to item number 2. Notice this one is set as a usage-based item. We have that over here. So we're going to track how many licenses did the customer use. But Brian, you told me that service contract includes the first 50. So if we come to the advanced pricing options, I can come in here and tell the system that the first 50 are a free quantity, and I'm going to reset that every period. Now I'm billing monthly, so I can say 50 free per month. If I wanted to bill this quarterly, I might set my monthly option here to quarterly, and maybe it's now 150 free every quarter. So I could set 150, again, set it to 1. If I'm billing monthly, I can set 150, or reset it every 3 periods. A lot of flexibility. We also have minimums, maximums by amount or by quantity. You may have a situation where, because of the pricing, the customer has a minimum bill of, say, $50, a maximum bill of $300, or maybe it's based on the quantity. I could set those amounts in here as well, and it will automatically handle that.
And do I
Now-
still need to have someone key that in on a monthly basis then? Like, are we still going to have that fat finger issue, or is there a way to have it draw in automatically?
Great question. So Brian, I happen to have open on the other screen here, which just reset on me, my data entities. So inside of finance and operations, Microsoft has built this import-export engine called data management. It allows us to import or export information in or out. And what we have done is gone ahead and created data entities that match our product. So these are the out-of-the-box data entities. Think of them as APIs. You can use these to connect your front-end system, your CRM, your Salesforce, your CE, whatever that front-end system is. We really don't care, but whatever it happens to be. If I was to filter these by anything that starts with SB, which stands for our subscription billing, notice all these ARCBs. These are all for the advanced recurring contract billing. This one right here manages usage. So I can import in the usage based on, for example, an Excel spreadsheet, based on that direct integration. I can import that in automatically and have that feed directly into the system. What that's going to do when it imports in is store it in here. If I'm doing a meter reading, it will take the current reading. Of course, my current reading this month becomes next month's previous reading, and then the current reading comes in and it compares the difference. So what I've done here is I've imported 450. Remember, the first 50 are free, so the system is going to bill for 400. Now, this is where we're taking that trade agreement and doing something a little special with it. Let me just drill in and show you what I'm talking about. If I come back to this item, and Brian, you've probably seen trade agreements out of the box, but let me show you very quickly. I actually have a 4-level trade agreement built for this particular item. And if I come into the trade agreement, what we can see here is if you sell to your customer from 1 to 10 items, they're 150 each. If you sell 10 to 25, they're 125 each. Up to 100 is $100 each. And then from there to infinity is 75 each. Now, out of the box, if your customer was to buy 400 units, finance and operations would look at this trade agreement and go, no, 400 doesn't fit here. It fits in here. Your 400 would be at $75 each, or if my math's right, about $30,000. But watch what we're doing that's a little bit different here. I'm coming back into this, the billing detail, and notice that it's saying that my 400 are an average of $83.44 each, or $33,375. Because if you look down to the lower corner, it's saying the first 10 are in fact 150 each. It adds that to the next 15 at 125 each. It adds that to the next 75 at 100 each. And then your final 75 are now, or 300 are now at the 75. So now my 400 is not $33,000 or $30,000, sorry, it's $33,375 because it's
our CFO is going to love the
tiers.
fact that there's an extra $3,000 in revenue that you just found us.
Yeah, and a lot of our customers are really liking that and enjoying that particular tiered pricing. We have another option, Brian, that's called flat tier. The way the flat tier would work, if we were to use, for example, the same idea, we might have and say, from 1 to 10, rather than being 150 each, we might say it's a flat price of, say, $1,200. If you use 1, it's $1,200. If you use 15, it's $1,200. It's anything within that entire tier is a flat price. So if I just go back out to my pricing options, you'll notice that one of the options I do have available there underneath the tier is that flat tier. So that would take anything within that tier, flat price, your customer can use as much or as little of that as they want. Again, we're finding that one is really, really popular for customers that sell a high volume of low-priced items. They don't want to price them by the each. They don't want to count maybe by the each. They do estimates, and then here's your tier. And the tier might be from 1,000 to 3,000 to 10,000, something like that. But it's a very popular option. So that's the software option. Now we're looking at the pro services. Now this is a situation where the customer is buying 20 professional service hours. And again, they're going to pay for them up front. They're a one-time. I'm not going to bill this over and over and over again. I can always add another line to this later. That's another nice thing about it is once the schedule is going, I can always add another item at any time so that I can maintain a complete history of this customer. But in this case, I want to recognize the revenue as these things are used. So we get a couple options to do that as well. Again, if I come back into the advanced deferrals, I can do this based on an event-based schedule. And in this case, I've got it set up based on percentage of completion. A lot of our customers are saying, we work in a project-like environment, but not really. We don't want to use the project module. That's way more complex than what we need. We simply want to recognize revenue for something we build based on percentage of completion. We've got project managers that can tell us what that is. So we create a milestone, again, with no end dates. We could have an expiration date, though. We could say, for example, if these hours are not used in 12 months, they'll automatically expire and be recognized. But let me just go back to the advanced revenue expense deferrals module for just a minute, Brian, and I'll show you how these event templates work. We actually have a couple different options in here. Let me go to my event-based templates, and we can do these based on variable amounts. So variable amounts per milestone, if I know what they are. Equal amounts. I'm actually having a demo that I'm doing with another customer later today that I've got to show them equal amounts where they're selling training vouchers, for example. And when they sell training vouchers, you might buy 50 training vouchers. Well, they don't want to have to create 50 deferral schedules. They create one schedule with 50 events, and they may even have an individual, like a voucher number. And as the customer uses it, that revenue gets recognized. And we create them for the equal amounts. Could be percentage of completion. We've actually just added variable quantity. So think of a situation where rather than saying, we are at 18.3% of those 20 hours that the customer bought, you can simply say, we use 4 hours this month, and we recognize 4 hours. So there's a lot of flexibility in how those variable things work. Now, coming back to the advanced recurring contract billing, I'm going to go through and build all of my schedules. I'm going to have that all set up. Periodically, I'm going to come in and run the invoice creator. Oh, one more thing I should probably show you, Brian. Let me come back into the billing schedules. You did mention that you were concerned about ASC 606 as well. Let me show you here. I'm going to pull up an example that's already built. I haven't invoiced it yet, but I've got hardware. I'm going to build this one time. I've got monthly SaaS software. I've got an annual service contract. I got professional services. Again, some of these are deferred. In this case, I've got my service contract is deferred straight line. I've got some of these, for example, this one is going to be deferred. This is a straight line as well. This is my professional services again, so it's going to be that percentage of completion. So I've got different billing cycles. I've got different dollar amounts. And in fact, I've even gone ahead and my sales guy has gotten really tricky on me here and said, because of the cost he's getting for all this other stuff, he's going to give them 15 hours of professional services free. Well, that looks really good on the customer's invoice, but in the back office, that doesn't fly. There has to be revenue associated with it, especially if it's something that we're going to defer, because we have to make sure, ASC 606 tells us that once we've defined what our performance obligations are, we have to understand what is their standalone selling price and then reallocate the revenue or the transaction prices that we're seeing here based on those standalone selling prices. Well, if I come up here to this revenue allocation, notice I can very quickly look at this and I can see the items I'm billing. This is the contract value. This is what they're going to show up on the customer invoices over time. I've got this one-time item, this $12,000. This monthly software will eventually bill for $360,000. I've got my service contract, $5,000 annually for a number of years. And I've got my pro services. The customer's going to see it at zero. My standalone selling price for the contract, though, is quite a bit different. So we're reallocating the revenue. We're taking this standalone selling price of the item. We're dividing it by the sum of all of the standalone selling prices. That gives it its relative value, and then multiplying that by the actual contract value. So this $12,000 piece of hardware, that's what the customer's going to pay, but I'm only going to recognize $7,428.57 worth of revenue. And we go down through each item. Notice this item the customer is getting for free. The invoice shows zero. I actually have to recognize, and in fact, in this case, I'm going to defer $5,571.43 worth of revenue. So the ASC 606, or if you're international, the IFRS 15 requirement is there as well. Now, again, I can do it from here. If I'm doing a one-off, I can create the invoice just for this particular billing schedule here, or I can come back into the invoice creator and I can tell the system I want to invoice everything, say for as of the end of the month. I can push to a sales order or a free text invoice. I can create the sales order. I can create it and bring up the posting form. I can create the free text, obviously, or in either case, I can create it and post it all the way through. If you don't have to pick, pack, ship, if you're primarily a services business, it's just going to save you a step. So I'm going to choose that one. I'm going to hit select. It's going to bring up some criteria. So, what is it you want to bill? I can fill in some criteria. I can filter this by schedule, by customer, by item if I want to. I'm just going to leave it alone. It's going to bring up everything in my entire database that needs to be billed as of that date that I selected, which was the end of August.
Now, this is a sample database. You can see I don't run my invoices every month like I should, but because I left the from date open, it goes back into the past. That avoids slippage. For example, here at Binary Stream, we actually bill 90 days in advance to make sure that everybody's got time to process the invoice so that people's services don't expire. We get the reg keys updated and renewed and so on. But what if my billing people today, they've already billed, we're in August, so they bill August, September, October. They're getting ready to bill November. Well, you add a new service in the month of September, we bill November. I'd kind of like to have that revenue for September and October as well. By leaving this open, I can do a quick scan and see, is there anything from the past? Maybe I want to bill that separately. Maybe I want to put it on the same invoice. I can consolidate the invoices by customer, by item. I can separate them by item group. That customer I mentioned earlier that has different people looking after their accounts payable, want different item groups on their own invoice. I can do that as well. Okay, Brian, so we looked at the invoicing. Of course, some of those items we talked about earlier have deferrals. So let's go to the advanced revenue expense deferrals module, and I can see my deferral schedules here. And I can see I've got a list of them. And you'll notice some are debit, some are credit. So I can do my expenses in here as well. So if I want to use this for my prepaids, we didn't look at that today, but that's kind of a nice plus for your accounting department. Of course, if something has cost of goods, like here's a piece of hardware, for example, and this piece of hardware has actually got 3 milestones. I'm going to recognize a percentage when I deliver, when I implement, when I do my training. And in this case, it's 8,000. Well, as accountants, we love the matching principle. If I go to the one right below it, that's the debit side. This is the cost of goods. My cost of goods is going to match. So if I was to straight line, my cost of goods would straight line. If I'm going to do it based on milestones like I have here, my cost of goods would milestone as well. If I come back into one of these other schedules, I'm just going to try to find one that's a straight line. I can come in, for example, and find this one. I think this is a deferred. So here's a situation where I have a prorated amount. I'm going from the 6th to the end of the month. I've got it prorated. I've got equal amounts from that point on. And this one is spread out straight line over 12 months with a proration at the back end if needed there as well. But again, notice how it is equal per period. You may choose instead to not do equal per period, but if we turn off the equal per period option, then that will give us per diem recognition, where my months with 31 days would get a little bit more revenue than my months with 30 days, of course, that extra day. And if February happens to fall in there, it's sometimes 28, sometimes 29, we get even less as well. Again, I bill all of these schedules. They happen automatically. Once a period, typically the end of the month, maybe 1 or 2 days into the next period, I come into my recognition processing, simply tell it, I want to pick up everything that needs to be recognized as of a certain date, put in my description, do I want to override the transaction date? I probably would. I hit select again. There's a bunch of criteria. I can filter and sort that. When I click OK, it's going to bring up everything in my revenue recognition module that needs to be recognized. Again, I click OK. I can schedule it using the batch processing, whatever I want to do. It's simply a one-off process at the end of every period. So with 2 very simple processes, I've got my schedules built. I run my invoices. If there's deferrals, it builds the deferral schedules. Whenever I'm ready to recognize my deferrals, I simply run that process and my deferrals get recognized. So Brian, I think you'll agree that this is very, very high level. We maybe want to sit down and do a little more in-depth discovery, maybe look at some very serious examples of what you're looking at, what your biggest headaches are. But I think you can see at a very, very high level, this will solve Hooley's problems. And I do want to point out, we'll stop the demo side of things here now. I do want to point out that if you're watching this thinking, this looks like it might be good for my business. Maybe I have a customer, maybe I have a partner that needs to know about this. One thing that Brian and I really like to do, in fact, it's the best part of my day, is doing just what I did today. Solutioning, trying to figure out, can I solve that problem that's giving you a headache? Can my system, can our system handle that? Can I build it out and demo that for you? So I want to throw that offer out there, make that available to you. I do want to also point out, if I can go back to that PowerPoint deck just for a moment, we've been looking at this in finance and operations. Of course, that's the track that we're looking at today. But I do want to point out that we do have the very same thing in Business Central. Here's a billing schedule. Here's a deferral schedule. We have the same thing in Dynamics GP, billing schedule, deferral schedule. So whichever operating system or ERP that you're using, as long as it falls under the Microsoft Dynamics umbrella, we're here for you.
Thanks, Neil. So in conclusion, as we showed previously, we do support not only F&O, but also the Business Central and GP environments. As you saw, they emulate the underlying ERP. So if you're a GP user, the experience of subscription billing in GP is identical to what you are used to. Same rules apply with Business Central. So that concludes our presentation today. Again, I want to thank the DynamicsCon people for inviting us to speak. I hope you learned something, and if you do think that this solution would be valuable for your organization, please reach out to us. Our contact info is on screen. Email me, sales@binarystream.com. We would love to set up a discovery call with you, similar to the one that we went through today, and find out exactly how our software can help your business be more productive going forward. Thanks again.